liquidity because of the dollar going up ahead of the election, because of rates going up ahead of the election, and the fears about Trump and fears about tariffs and stuff like that. That what was causing that issue, and that does lead crypto prices.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal will talk about his bold crypto predictions. A trusted voice in the crypto space, Raoul shares why Bitcoin could rocket past $100,000 and what's next for Doji and meme coins by 2025. Let's dive in.
Don't forget, we had an 8-month consolidation with a 40% range.
Yeah, that's why I asked.
Right. So generally speaking, it tends to be explosive coming out, the banana zone, right? And I kind of set people up for the banana zone, and here we are in the banana zone. So the question is...
So we're in the banana zone. So we're in... You're saying we're firmly in the banana zone.
How can it not be bananas,
okay.
Right? 50% in a month.
Yeah. How big are the bananas in the Cayman? Because that's quite a big banana.
Okay. They're not very big here, but... We're not far from a lot of big banana plantations in different islands. But so that's a decent-sized banana, but that's the start, right? Because generally speaking, the post-election year, or what we would call crypto fall or crypto autumn, tends to be very strong. So it tends to be very strong. The macro backdrop is obviously very good because of deregulation, new government, all of that stuff. So we've got a good setup. It's gone far and fast. I think everyone's a bit PTSD'd still, so which is why I err towards the it probably has one more squeeze because so many people think it needs the correction now. But I hear your point of view too. So I'm not saying it has to be one or the other, but that's my view. It goes up first. Everyone thinks, oh, it's fine. We're at 110. We're getting 150 now, and then it corrects in everybody's faces quite sharply.
So you're saying max pain? You're saying max pain is another leg up. That's what you're basically saying. Max pain is sending this thing one leg higher.
Yeah, one leg higher in kind of disbelief, and then kind of trapping a bunch of new entrants in, and then it does the typical 30% correction in a week and a half, and everyone's like, "Holy shit, what is this thing I've bought? Why did my friend of Thanksgiving tell my cousin of Thanksgiving tell me to buy this? It's gone down 30%." That we've got to go through that sort of stuff. Then normally it should rally all the way through till US tax season.
Which is April. So that's April.
Yeah, it's the March-April period. It usually is extremely strong going into that. And then if it's very strong, then you have a very big correction because everyone needs to pay some taxes. So, and then normally what happens is it corrects again. So you can see it there in 2021. It then had a 50% correction that time, and I'll come on to that in a sec. And then it rallies into year end. I think we're closer to a 2017 analogy, which was a much stronger back end of the year. I think people have real PTSD from last time. And I was actually going through this morning, what was the key factor that caused the stunted cycle last time? It's because the speed the business cycle went up straight out of recession, and how fast financial conditions peaked. They peaked in March of 2021, and the market essentially peaked there with the second attempt at rally. 2017 peaked way towards the end of the year. So it was just the weird setup of the post-COVID, inject all the liquidity, then, oh my God, we need to withdraw it. That setup, I think, caused that cycle, while 2017 and 2013 were more similar.
Bitcoin's price outlook for 2024 and beyond paints a picture of remarkable growth, driven by strong market fundamentals and growing adoption. As of now, Bitcoin is trading at $95,496, reflecting a 2.16% increase in the last 24 hours. Analysts are projecting a bullish trajectory, with Bitcoin potentially reaching $130,000, $661.77 under optimal conditions in 2024. Even on the bearish side, the cryptocurrency is expected to maintain a solid floor at $76,396.80. This signals strong investor confidence and sets the stage for Bitcoin's long-term ascension, with an average price forecast of $405,034 by 2034 and a potential peak of $524,941.06 by 2035. In the short term, Bitcoin's performance remains influenced by key support and resistance levels, with critical support identified at $52,000 and significant resistance near $68,000. Technical indicators such as a Relative Strength Index, RSI, reading of 65.47, place Bitcoin firmly in bullish territory. Exponential moving averages, EMAs, show robust support near the $60,000 mark, while the recent Golden Cross formation points to potential upward momentum. September's market sentiment has further bolstered optimism, suggesting a positive bias heading into 2024. Looking ahead, milestones like $155,569.27 in 2025 and $273,567.21 by 2030 are within reach. Bitcoin's dynamic growth remains tied to macroeconomic trends, technological innovations, and evolving investor sentiment, making its future both exciting and unpredictable.
That is a big kind of wedgie pattern. It doesn't look catastrophic, right? It's been kind of sideways range.
Yes.
But my guess is, same way as you, that ETH probably outperforms. And the reason being is you're just going to deregulate this thing. And if you are a financial institution, you will tend to build on ETH or ETH Layer 2s. And the reason being, it's like IBM or Microsoft. It's a broad, deep ecosystem. You don't get fired for doing it.
I mean, again, I think that's true, but I also think that the ETH ETF flows, I think the ETH ETF hasn't had much love, and I think the fund managers are looking at this and going, look, Bitcoin's up 50% since the election. ETH is not up 50% since the election. ETH is up a lot less since the election. And I remember when I came into crypto, and I thought I'd missed Bitcoin. It was like Bitcoin had just rallied from 500 to 1,000. I was like, okay, I've missed Bitcoin. I should get into ETH. And then it's, like $9, we started buying ETH because we didn't even know what it was. We just said, well, it's just crypto and it's not Bitcoin, and Bitcoin's had a run. And I'm getting the same vibes now. Like I'm looking at ETH and I'm going, like as a layman, you look at this and you go, look, I don't really know what Bitcoin is and what ETH is. I don't really know the difference. They're both cryptos. One's the big one, one's a slightly smaller one. It looks like ETH may actually have a run.
Yeah, I don't disagree. There's that weird psychology that goes on. It's also, I think, there is going to be fundamental flows behind it as well. I think ETH overbuilt capacity or block space for where we are currently in the market because of the layer 2s. But over time, I think we'll use that block space up because I think the institutionals will use ETH.
I think I agree with you, although I think a lot of the ETH layer 2 block space is redundant. I've got to be honest, I don't see why we need Optimism and Arbitrum, to be honest. I think, Optimism kind of solves the problem by itself, or Arbitrum solves the problem, but I think Coinbase chose an Optimism stack, so I don't think we need those. I think you've got a lot of these layer 2s which are like ZK this and ZK that and those things. I don't know if we need that much block space. I don't know if we're ever going to need that much block space. But
that's probably true. I mean, every one of these big infrastructure booms, you overbuild. Whether it's broadband, whether it's whatever, you always overbuild. 3G, everything.
Robert Kiyosaki, renowned author of Rich Dad, Poor Dad, has issued a bold prediction that Bitcoin is on the brink of surpassing $100,000. He warns that this milestone will deepen the financial divide, potentially locking middle-class investors out of the crypto market as wealth consolidates among the ultra-rich. To combat this, Kiyosaki urges individuals to take action now, emphasizing the importance of small but steady investments in alternative assets like Bitcoin, gold, or silver. His strategy is simple: start small, even if it's just buying a fraction of a Bitcoin, and set consistent monthly goals to build wealth over time. Kiyosaki also critiques fiat currency, expressing distrust in government policies that devalue traditional money. He views Bitcoin not just as an investment, but as a safeguard against economic uncertainty. As Bitcoin edges closer to $100,000, he sees it as a pivotal wealth marker, accessible now but potentially out of reach for the average investor soon. Kiyosaki's advice is clear. Ignore conventional financial systems and start acquiring alternative assets today. Don't let fear of missing out hold you back. Even a small step toward financial freedom can lead to significant long-term gains. Start now, build steadily, and secure your financial future. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.